Hey, good afternoon and happy Monday, everybody. This is your market update for January 6th. I hope you had a great weekend. So market today and this week will not be as action-packed as the market was last week with information. There was a bunch of information that came out last week as you could see in my market updates. I know that they were longer than normal, but there was just a lot of information to update on. Of course, the market's still digesting the information as a result of that much better than anticipated employment report that came out the end of last week that showed job creation that was significantly higher than what the market had anticipated. And my hope, again, as I mentioned last week, is that the markets will continue to digest that information and read through some of the anomalies in the report, because if you dig into it deeper, it truly did not represent job creation numbers that were in line with what the headlines, what the report had initially indicated. So we'll wait and see how the market continues to digest that information. But certainly based upon headlines alone, the market is still, especially the mortgage-backed security market, not having a great day today after closing down 41 basis points on Friday, opened down 67 basis points today, currently down about 45 basis points. So we've lost about 100 basis points in mortgage pricing over the course of the last 2 days, which equates to about 0.25% in interest rate. So interest rates from last Thursday afternoon to today are probably about 0.25% worse, give or take. The stock market hasn't been near as impacted by the employment numbers. I think the Dow currently down about 5 points today. S&P 500 down 20 points. NASDAQ down about 85 points. The market has, in looking at the employment report and the employment numbers being so much better than anticipated, has certainly increased the likelihood of future Fed funds rate hikes moving forward. So, for instance, in March, the market pretty much at this point is a foregone conclusion that the Fed's going to increase the Fed funds rate by another 25 basis points. And then the next meeting after that in May, the likelihood of another 25 basis points increase has increased up to 75%. And then now the market is also priced in the likelihood of another 25 basis points rate hike in June from 8% to 28%. Of course, there's a lot of time between now and then and a lot more information to come out. So those numbers could certainly change. Not a whole lot of economic information coming out this week. Jerome Powell, the Fed chair, is scheduled to speak tomorrow afternoon. And of course, when he speaks, you never know what you're going to get in regards to how the market's going to react. So we'll wait and see. Beyond that, the other major report coming out this week is initial jobless claims from last week. And remember, initial jobless claims is a report that indicates people filing unemployment rates or unemployment benefits for the first time. So we'll wait and see how those numbers come out. Beyond that, we will continue to keep you updated, and hope that you guys all have a great afternoon. And I look forward to seeing you in the morning. Thanks so much.